Hello guys, welcome back to my channel. We are back with another video. After a lot of research, we came up one of the best company in chemical sector. So today we will have a look on the detailed analysis of Berger Paint India Limited. We will have a detailed look about the company's business. We will have a key financial highlights of the company. We will also have a look on the balance sheet and PL account of the company. We will have a holdings and inside trade of the company. And at the last, I will share you my own view about this company, whether you should be adding this company on your watch list or not. But before we start, if you are new to my channel, don't forget to like and subscribe the channel and share with your friends and family. Let's have a look on the company. So the company is engaged in the manufacturing and selling of paints. So it is a second largest paint company in India, the fourth largest paint company in Asia, and the seventh largest decorative paint company in the world. Company's 80 to 85% of the revenues come from the decorative paint, while the other comes from the industrial segment. In industrial segment, company is present in protective coating, automotive and general industrial and powder coating. Company also has several reputed customers in the industrial segment including Tata Motors, Ashok Leyland, Mahindra and Mahindra, Hero MotoCorp, Royal Enfield, Ford Motors, Tata Hitachi and many more. Now let's talk about the company's geographical locations and distribution channel. So the company has a distribution network spread across India, consists of almost more than 50,000 dealers and retailers with around 180 stock points. In terms of global presence in 8 countries including Russia, Nepal, Bangladesh and certain countries in Europe. In financial year 2022, 8% of the total revenues were generated from international market. Now we will talk about the multiple manufacturing plants. So the company has 24 manufacturing plants in India, 2 are in Nepal and 2 each in Poland and Russia. And within these 24 plants, some of the plants were included from the subsidiaries in India. In capacity expansion, company is actually just having to set up a greenfield projects in UP. The project's cost is almost around 900 crores. Out of this, 745 crores has already been included till June 2022. Commercial productions is expected to start in financial year 2023 in the third quarter. Furthermore, the company is also doubling its capacity of industrial paints by 1,500 meter ton in its Jijuri plants and expanding its capacity in West Bengal. This was the capacity expansion of the company, and in 2020 the company enters into a scheme of amalgamations with a listing companies whose name is Jalgo Smith Clean Customers Healthcare Limited, wherein it would be merged with HUL. So this was the overall detail of the company. Now we will have a look on the graph of the company. So the current price of the company is 604 rupees. The all-time high of the company was 813 rupees, where the low was 543 rupees. The company has given negative 20% less to its shareholders in the recent 1 year. So this was the graph of the company. Now let's have a look on the fundamental key highlights of the company. So the market cap of the company is almost 60,000 crores. The PE of the company is 62. The ROC, which is return on capital employed, is 26. The book value is 40 rupees. The ROE, which is return on equity, is 22.5%. The dividend yield is 0.51%. The face value is 1 rupees, whereas the 5 years return is 18.7%. The 5 years profit is 14.1% and sales growth for 5 years is 14%. So this was the fundamental key highlights of the company. Now we will have a look on the competitors of the company in the global market. So the company ranks second in terms of chemical businesses, which includes paints. So the first position has been taken by Asian Paints. The second one is by Berger Paints. So you can just pause the video and watch the fundamental key highlights with its competitors, which will be easier to you to do. Now let's have a look on the quarterly results of the company. So in June 2019, the company has a operating profit of 305 crores, whereas in June 2022 it's up and goes up to 405 crores. You can see the overall the sales of the company has increases over time, which includes also expenses, and OPM, which is operating profit margin of the company, was 18% on June 2019, which has goes down to 15% in June 2022. The net profit, which comes out after deducting the taxes and interest, is 176 crores on June 2019, whereas in June 2022 it's almost 254 crores. So you can see in quarterly results of the company, the net profit of the company has grown up on a decent way. Now let's look on the profit and loss account of the company. So the operating profit of the company on March 2011 was 250 crores, whereas right now in September 2022 it's almost around 1500 crores. The company's sales has continuously increases over time. That is, on March 2011 it was around 2200 crores, and right now it's almost around 9700 crores. The OPM, which is operating profit margin, on March 2011 it was around 11%, whereas in right now it's almost around 15%. The net profit, which comes out after deducting the taxes and interest, is 150 crores on March 2011, whereas right now in September 2022 it's almost around 946 crores. So this is the overall expectations of the TTM, which maybe comes out after on March 2023. So the earning per share of the company has also increases over time. That is on March 2011 it was around 1.5 rupees, whereas on March 2023 it will be around 9.7 rupees. Dividend yield of the company is also good, which is around 30 to 35%. So the dividend payout of the company is looking awesome. So this is the profit and loss account of the company. Now we will have a look on the balance sheet of the company. So in liability sides, we can see that the reserve of the company has grown up on a nice way, whereas the borrowings, which may be included in a form of short-term loans or creditors, is 330 crores on March 2011, which has been grows up to 1000 crores on March 2022. The other liabilities, which may be included in a term of long-term loans, on March 2011 it was around 450 crores, whereas in March 2022 it's almost around 2270 crores. So see, this was the liability side of the company. Now let's have a look on the asset side of the company. So the fixed assets, which may be included in a form of machinery, so on March 2011 it was around 434 crores, whereas in March 2022 it's almost around 2187 crores. The fixed assets also includes building and land, so you have to be careful about that. So the investment of the company on March 2011 was around 53 crores, whereas in March 2022 it's almost around 234 crores. The other assets, which maybe includes like debtors, inventory, so on March 2011 it was around 902 crores, whereas in March 2022 it's almost around 4185 crores. Other assets also include cash in hand and bank. So this is the overall liability and asset side of the company. Now let's have a look on the cash flow of the company. So in cash flow, the net cash flow comes out after adding operating activities from investing activities and financial activities. So on March 2011 it was around positive 84 crores, whereas in March 2022 it's negative 33 crores, just because the company has invested in some of the for the merger purpose and some of the company's acquisitions. So you can see over there is a negative 521 crores on investment activities on March 2022. So this is the overall cash flow of the company. Now let's have a look on the important ratios of the company. So the debtors day ratio is always the same. As in March 2011 it was around 44 days, whereas in March 2022 it's almost around 44. So debtors day ratio measures how quickly cash has been collected from debtors. Inventory day has increases over time. That is on March 2011 it was around 128, whereas in March 2022 it's almost around 176. So the inventory day ratio is the average time a company keeps its inventory before it is been sold. And the last one is cash conversion cycle, which has been decreases over time. That is on March 2011 it was around 93, whereas in March 2022 it's almost around 83. So the cash conversion cycles measures the number of days that a company takes to convert its investment in inventory and other resources into cash flow from sales. You can also have a look on the ROC, which is return on capital employed. That is on March 2011 it was around 25%, whereas in March 2022 it's almost around 26%. So this is the overall main ratios of the company. Now we will have a look about the inside trade of the company. So you can just pause the video and watch the names, including its quantity and average price. You can just watch it if you want to. Let's move on to the next sheet, which is the pros and cons of the company. So in pros, the company has shown a good profit growth of almost 20% in the past 3 years. The company has maintained a healthy ROE, which is return on equity, of 24% in the last 3 years. The company has maintained healthy ROC, which is return on capital employed, of 30.7% over the last 3 years. The company has a healthy interest coverage ratio. And in cons, the company has shown a poor revenue growth of almost 12% in the last 3 years. The company is trading at a high PE of almost 70%. The company is trading at a high of 42.42. Now when we are talking about all the details of the company, let's have a look on the holdings of the company. So on June 2022, the promoters hold almost around 75%, whereas the mutual funds owns 1.01%, the DII holds 2.56%, the FII hold 11.03%, whereas the retail and the other owns 10.41%. As of June 2022. Now this is the data of September 2022, the current data. So the promoters holding is almost the same. The mutual fund increases its stake from 1.01% to 1.44%. The DII has decreases its stake from 2.56% to 1.73%. The FII, which is foreign institutional investors, hold 11.03% on June 2022 and has increases its stake by 0.1%. So it's almost around 11.13%. The retail and the others holds 10.41%, whereas it increases over time, and now the retail owns are about 10.71%. So this was the holding details of the company. Now let's talk about the investment checklist of the company, which is provided by the ticker tape. So the current price of the company is more than its intrinsic value. The stock has generated better returns than FD. The stock doesn't offers attractive dividend yield. Even it is good to consider as the stock is not on overbought zone, and there is no ASM or GSM list, and not a lot of shares has been placed by the promoter. So in personally, I really like this company as because the company's balance sheet is awesome, and also it's growing up. Even in the sales, the company is actually making more money, and in the long term, the company's main focus is on the luxurious paint area. So over there, they can actually get some more premium than what it actually getting right now. So this was the overall detail about my personal knowledge, that whether I'm going to apply for this company or not. So, and yeah, I am going to apply for it. So not right now. When I will get it on a nice discount, I am surely going to have some holding in these shares. So this is not a buy or sell recommendation video. This is just for your personal knowledge. Do your own analysis before investing. So thank you so much for spending some time with us. We will back with another topic, and then bye and have a nice day. Bye bye.